Okay, then we have our general journal. So a general journal, we said we will record transactions that we cannot record in any of the other journals. So who can think of a transaction that we would record in our general journal? Besides the drawings and the capital contribution that we
Trading stock deficit.
A trading stock deficit? What does trading stock deficit mean? So let's say we had stock and we had a flood and got damaged, and so when we counted our stock, it disagreed to the value that we have on our system. So there was a trading stock deficit, right?
Depreciation.
Yes, depreciation, right? Now depreciation, we won't be able to record in our cash books because it's not a cash transaction. It's not a credit sale, so we can't record it in our debtors journal. It's not a credit purchase. So that type of a transaction we will record in our general journal. Now there's very few columns in our general journal. It's very simple, but it's confusing to do your general journal, right? So you have your document number. You'll put in, for example, a journal voucher number. You'll have the day that you're recording this, then your details. Now what details do you put here? Do you remember we did accounting equation? Right? And you understood accounting equation very well, right? You asked yourself 3 questions. What accounts does this affect, right? What type of an account is it? Is it an asset, liability, or a owner's equity type account? And then is it increasing or decreasing? Now you do the same thing when it comes to your general journal, because you need to understand which account are you going to debit, which account are you going to credit, right? And then is it going up or is it going down? Because that will help you understand whether it's a debit or a credit. And that's all that your general journal is. It's just translating from your accounting equation into an actual, into recording that transaction. Okay. So very simple, but very important, your general journal. Okay. Any questions before we go and do some work now? Any questions about the journals? No. Okay, so we're going to go and do exercise, the example in our textbook. What page is it? It's 5.1. Okay, now 5.1 is a very long example, and it involves all 8 journals. All right, so it's going to take us a while to get through it, but we're going to start. Now remember we did Letsema furnishes in previously when we did lecture unit 4, right? Now then Letsema just opened, and they had decided that they were just going to do business on a cash basis only and not offer credit. But Mr. Letsema soon realized, or is it Mr. Ungaretti? Leroy Ungaretti realized that if he wants to capture the share market, then he needs to offer credit as well. Did you have a question? Okay. So he's decided to offer credit in the 2nd month. And the markup for Letsema Furnishes, they tell us, is 50% on cost, right? So how do we calculate our cost price when markup is based on cost? Okay, so it was selling price divided by 100 plus the markup times 100. Okay, do all of you get that? All right, so we're going to now go through the example, and they tell us that we're going to use the cash book receipts, cash book payments, petty cash journal, debtors allowances journal, and a few other journals there. All right, and then we have our transactions. So the first one is, who's going to read? Yes, Mpo, you can read, Mpo.
You make the following additional capital contributions. A personal computer to the value of 3,000 Rand. SARS has allowed Leroy to claim back the full VAT amount on the value of this computer. Journal voucher JV1 was issued and the cash invoice he initially received in his personal capacity, as well as the SARS depreciation schedules, were used as supporting documents to justify the fair value of 3,000 Rand.
Okay, so that's a long transaction. What is it about? So who's donating the computer or giving the computer to the business? The owner. So where are we going to record this transaction firstly? General journal, right? Because it doesn't affect bank. There's no cash. It's not a sale. We're not buying anything. Okay, so it's a general journal transaction. So how do we do this transaction? What are the questions you're going to ask yourself? I'm just going to draw up the general journal first. So we've got, what are the columns for general journal? Document number first. Then we've got details. First your folio, and then debit, and then credit. Okay. Thank you guys for that. All right, so now we said, how do we do a general journal transaction, right? Here we know that what is this transaction? The owner is giving us, the business, a computer, right? We could call it equipment, right? So the business is receiving equipment which we classify as an asset, right? What is happening to our assets? They're increasing. Okay, so how do we remember the dead click? Who remembers dead click? How do we increase an asset? So we're going to debit expenses, assets, and drawings to increase, right? So we're going to debit the asset. What is the asset? Okay, so let's just draw. So we're going to debit equipment. Now when you're doing a journal, the first entry will always be the debit. That is the rule, right? The first entry will always be the debit. You don't write debit because you're going to enter the amount in the debit column. Okay. Now what does it say? What does the transaction say about the VAT? Okay, why did they actually go and state that we can claim VAT? Yes, because sometimes we have items that are disallowed and we cannot claim the VAT. And furthermore, we don't have an invoice to show us the VAT amount, right? This is a donation, so it will be notional VAT, right? So remember when we get, like if we're buying a second-hand item, we don't get an invoice from our neighbor for selling us the washing machine, right? It's notional VAT. So that's why they say we got all the necessary paperwork from SARS to approve that we can claim the VAT back. Now they say that we can claim the VAT back, so what type of VAT will it be? Input VAT. And what do we do with input VAT? We always debit. So we have another debit entry, and we're going to have input VAT. Correct. Now we've got our debits, and what is the amount of the computer? 3,000. Is that the including VAT or including VAT? So we're going to have to calculate what the VAT exclusive amount is. So somebody? 2,631. Okay, thanks again. Okay, so that is the VAT exclusive amount, how do we calculate it? It's the 3,000 divided by 1.14. Okay. So now what will the input VAT be? It will be your, either you could say that amount times 0.14, or you can say 3,000 subtract 2631, giving us
368.
Okay, so that is the VAT exclusive amount, right? Now, we've received these goods. How did we get the goods? From the owner, and whenever the owner gives us something, it is called capital, right? So, capital is what type of an account? Proprietary account, which is an owner's equity account. And is capital increasing or decreasing? Increasing. And how do we increase capital? We're going to credit it. So we know we're going to put an amount under credit, right? And when we put in our credit entry, the details for our credit entry, we always, it's always going to be indented, where we're going to leave a space and we're going to write capital. Okay? And what will the amount be? It will be the full amount, because that's the value of capital that's coming into our business. So we're going to credit 3,000. Okay. Now we have one final step for our journal to be complete, and that is to write a little story about what this transaction is. Right? We have to, if we look at this transaction 6 months later, we need to know what it was for. So we can just say computer contributed by owner. Okay?
Just a side question. So the little story is out of your own.
Yeah. We're not writing a novel. It's not even a short story, right? It's like when you SMS and BBM, those little short notes. Okay, just so that you understand what it was for. Okay? I mean, you understand computer contributed by owner. Any questions about the general journal? Yes?
If they don't tell you what voucher number is it, do you just presume it starts at 1?
Yes. They might give you the first one, and then it will be consecutive thereafter, right? So we'll just say journal voucher 1. And what date did this happen on? First, right? So when we are heading up our general journal, we'll say general journal of Letsema Furnishers, and we'll say for, what month is it? April 27, right? So when we say first, you know that it's 1st of April, okay? And what we will generally do, you'll always number your journals. So this will be general journal 1. Okay. If you don't number your journals, you can still go and find it by looking at the month, for example, April 27, but it's just going to take you longer to go and look for those journals. Whereas if you say CBR1 or CJ1, you know where to find it. Okay, so we will have, like there we've got our cash book receipts. If you have a look at your cash book receipts, remember we had the first month of operating was March. So that would have been our first CBR. So this is our second month of operating. I don't know if you can see that, but that's CBR2. Okay. Okay, next transaction.
A personal check was drawn in favor of the business, 20,000 rand. The amount was deposited directly to the business's bank account.
Okay, so where would this be recorded? Okay, is the business receiving money? Okay, so it's going to be going to our cash book receipts. And we're going to record it in our cash book receipts. And what is the document number? Did they give us? No. Okay, so we're going to say it's our first No, we have written out checks before, but we'll just say check CC1 for now, okay? And the date being?
First.
The 1st. So who would be the payee? Leroy Ungaretti. And how much was it?
20,000 rand.
Okay, now would we put that into our analysis of receipts column?
No, because
Why won't we?
Because it goes straight to bank.
And it's been specifically stated there that it was deposited directly into the business bank account. So we haven't received the money, so we won't have it in our analysis of receipts column. Remember, your analysis of receipts column is like the cash register, like the till. You know, when you click and it goes ka-ching and you put your money in, we didn't hear that, right? It went straight to our bank, so it's not going to go into that column. So we'll put it directly into the bank, and how much is it?
20,000.
20,000. Is it from a debtor? Does this have VAT? No, because it's just cash, right? There's no exchange of goods. It's not a sale, so it's not going to go to our sales column. So we'll put it into our sundry accounts, and it's 20,000. And what did we receive this money for? Capital. So we're going to write in our details, capital. Got it? Okay, the next transaction.
The loan statement from AAA Bank shows a debit for 1,849.32 being for the interest on the loan taken out on the 2nd of March 20.7. The loan accrues interest at 15% per annum. It also reflects a credit for 2,422, which constitutes the first installment on this loan. The bank statement for the current bank account reflects the debit order for this installment.
Okay, so what is this?
A loan.
Okay, it's a loan, right? So they're telling us that the bank statement shows us that there is an amount of 1,849 rand 32 for interest on the loan. We took out the loan, so it's safe to assume that we have to pay the interest, right? Then it says that it's at 15% per annum, and then it says it reflects a credit on the statement of 2,420 rands, which is the first installment, meaning a credit that we paid them, right? When did this happen? On the 2nd of March. Okay, so the loan was taken out on the 2nd of March, and this occurred on the 2nd of April, right? So we're going to record it now. What will we record in our journals, or in which journal would we record? We've got the loan repayment, and we've got the interest. So what are we going to record in our cash payments journal?
Loan payment.
2,420.
So we're going to record the actual payment of the loan, the repayment, in our cash book payments journal. Remember, money going out will go into our CPJ or CBP. Then the interest. Did we pay the interest? It's shown as a debit, right? And we haven't paid the interest yet. So where would we record the interest? In our general journal, because it doesn't affect bank. It's not a credit purchase, nor is it a credit sale. So we're going to record it in our general journal. So let's look at the interest, right? If we're going to do a general journal entry, interest is what type of an account? Okay, so interest is an expense. If the interest, we're paying out interest, that means our expenses are going to increase, right? How do we increase our expenses? Remember, debt, click. How do we increase our expenses? Debit expenses to increase them, right? So we're going to debit interest. What is it? What are we going to call this account? You can call it interest on loan, right? Are you going to open a different account if it was interest charged by a supplier? Okay? So better, you would group all your interest into one account, right? So if you said interest on loan, it's going to limit what entries you make into this account. So rather you could say interest paid or interest expense. Okay? So we'll say interest expense. And who is charging us this interest, or have we paid this interest? No. So we owe this interest to somebody, right? And who do we owe? We owe AAA Bank. Does that mean our liabilities are increasing or decreasing? Increasing. And how do we increase our liabilities? We're going to credit our liabilities. So we're going to credit AAA Bank loan. Okay? Do you all understand that? No, lady? You okay? Any questions? Okay, what's the story? Interest, yes. Interest on loan, we can say from AAA Bank at 15% per annum if you want to. Okay? You can say AAA Bank, okay, at 15% per annum. What's the amount?
1849.32.
And you're going to have 1849.32, debit and credit. Okay? So if you treat your general journal just like your accounting equation, you shouldn't have any issues with the general journal.